As the Aussie market climbs and the US market has some sort of retracement, absorbs the Donald Trump news, and we see possible unwinding of that Trump trade, we look to understand what to expect next on the US indices. Then we also want to look through into the Australian level and find the trading opportunities. Which ones have the best opportunity in front of us? And how do we understand what that looks like and where to start the buying or where to add it to the short list? The one who's guiding us through is Gary Glover from Novus Capital. Good morning, Gary. How are you?
Yeah, good, Chris.
Got this week's report and scanning through, just looking at that portfolio. There's a fair few positions in there. Bit of movement that we've had in the last couple of weeks. But most interestingly, when we have a look at what's happening, particularly starting off with the NASDAQ, we've had that massive bulge up after the elections. And then the next week, well, we seem to have opened higher, gapped higher, and then sort of faded back down into sort of that 138.2, the previous high. And we're, well, still in the top half of that channel. So how do you interpret all of what's going on there, and where do we look for the next magnet to pull us to?
Yeah, look, it's a little negative, the fact that we did get a reaction at the 150, but I still think the 160, 1.8, that 20,000 level is probably a bigger level if the markets. I still feel like that is more likely to get there. So yeah, so I think I mentioned last week there, you can get, as you approach those bigger levels there, particularly the Dow and the S&P, which have got the 100% expansions. Those are bigger levels there. You can get a reaction just before them and then come back. So that's sort of one thing I've noticed in the past there, where you sort of get close to those levels, you think you're going to hit there, then they have a reaction. But then they get there later on. So, but yeah, so I still think, look, the election year typically don't get big pullbacks in election years. So, yeah, I know we've got NVIDIA reporting tonight. That's probably a big one for the US market. That's the way that is the number one performing stock, really. So, being the current leader in the US, so that's, that is going to have an effect on markets here as well. So, but yeah, look, I still think, we can get a little bit high here, I guess, is what I'm thinking there. But yeah, it's it's a weird one here. Like, it's sort of like Nov and sort of probably January are the 2 months. So I think you might see, kind of months where you might see a little bit of a peak here. So you could see a little bit of a consolidation here, but I still think more likely to run through the end of the year.
All right. Well, we're not too far off that, as we're seeing sort of the year start to wind down. We're getting more Christmas party invitations. But the S&P 500, you mentioned that before, and you said the 100% expansion. I'll just quickly highlight that here. From the high saw at the start of 22, coming down to that October low in 22. Gary called that very well. If you want to go back and find those old videos. But if we look at that range there from a points perspective, and then add that on to the old high once it broke out, that's the magnet that you're talking about, isn't it? The 200%.
Yeah, definitely more prominent as well, Chris, as well. So it's a big level there. Market will be, you can sort of see that eventually get sort of hit there. So yeah, you just might get that upward grind here. We sort of see, you've been running, sometimes you run those, you move up aggressively like this, then you tend to sort of grind it out on the upward. Yeah, the upward sort of move there. I think it's some good ones there. And 21 was a probably good year there, where you saw you hit the upper band and then you just sort of grind it out on the, across the tops there. Yeah, you just sort of see, so we could just get a bit of a upper grind going on here into the end of the year. So you might just get a few up and down weeks and stuff in there. But yeah, I still think we're likely to sort of get that little, just don't see big pullbacks there. Even in 64, so the 60-year cycle there, I think we only had like a 5% pullback in that from that NOV. So it looked like that, go back and look at 64 there, it looks like it had a bit of a reaction there, but if you look at the percentage there, it was, I think, maybe 4.5%. So it wasn't even that large a pullback. So don't think we're going to see anything decent until next year. And with obviously Trump coming in as well, that, so I just don't think too much is going to happen here until Trump gets in office there. I think maybe a few concerns post that. Yeah. So it could well be by the rumor sell effect, so the market could stay, it's a bit like sort of Sigma. How Sigma's had that, it's run up there on the back of getting approval, and it's coming. And if that stock doubles lots waiting for approval. Finally, bang comes approval, and then the stock's probably gapped up and then eased off since then. So that sort of type of thing could happen on the US market here. We could just run up, continue to grind out into the inauguration. I don't know the date of inauguration. Do you know when that is, Chris? It's obviously January.
It's like that. It's always cold though. Like freezing on stage.
Yeah. But where the cycles are suggesting early Jan, but I don't know if the inauguration's around that timing there. But that would be the ideal setup, to be honest with you, is to just to grind it out here, do a bit of a messy sort of overlapping run to the end of the year. Trump gets in and everyone thinks the world's markets are gonna keep going there because he'll tax cuts to everything else there. That might be the could be the sell point there if the market's able to go another 5 or 8% higher potentially before the end of the year. So, but again, normally I think in that sort of first quarter of these sort of cycles, you probably get a bit of a topping pattern there. So you may just go sideways for a while. I think it's the second quarter of next year that I'm most worried about from a cycle point of view. But the good news is for the fifth year is that the fifth year is the year of extension. So there hasn't been too many negative fifth years. There might have only ever been one. So might only be one negative fifth year in the history of the markets. So it's definitely a year where you sort of definitely see strongest gains. And I think on average the fifth year, if I'm not mistaken, Chris, from a season point of view, I'm looking at the 10-year average. The fifth year has got double the returns of every other year. So it's normally a pretty bullish year, but I think it's going to be a tale of two halves in the fifth year. That's the way I look at it. Choppy first quarter, negative second quarter, and then probably recovery after that into the end of the year. But so it could make it pretty volatile, which would kind of make sense because Trump's not. He's not volatile, so he's when he was in office previously, and there was anything but not entertaining, So which could throw markets here. A lot of that uncertainty. What's he going to do? What's he going to do around this? Do around that? So that might be the reason there for that volatility is the uncertainty of what might lay ahead. So, but let's look at the markets here. So that. So there's some people I think that should get up to around that 61.42 mark there by the end of the year. The Dow, I think around about 45,000, Chris, as well. I think is that looks like the other mark for the other US market as well. So,
well, just to clear up a few points that you just said there, the inauguration is the 20th, unless it falls on a Sunday. That becomes the 21st. And about the fifth year, clarify for those, save the questions. The 4-year presidential cycle. We're not talking about the fifth year of the cycle. We're talking about the fifth year in the calendar. So currently we're in 2024, the fourth, 2023, the third. Next year, 2025 is the fifth year. Just to save those who might be wondering how those cycles overlap. But
yeah. Well, I think if you look at the, I'm just trying to think what the
Well, while you look that up, I'll just talk through this 100% expansion once again. The highs that we saw very early 2022, and the lows, October lows 22. Take that range, throw that on top of the highs once it broke out, and that's that 200% range that you're looking at, and that's that target area that you got 4,500, just over that in that 200% expansion once more. So you were looking something up there, Garrett?
Yeah, I was trying to work out what the I've just got a chart of the 10-year cycle in front of me, but the fifth year is the biggest by far. It absolutely rips. So it doesn't give me a number here, but you can just see the 0, 0, 1, 2, all three of the 9, and the fifth year, the average just straight up. So it is the strongest year on historically the fifth year. If anyone wants to go back and just go back and look at the last 50, 60 years. So what we're talking about there is looking at 2015, 2005, 95, 85, 75. Just go and look at those years on the indices. That tells you that 50 years pretty bullshit. But yeah, I think we're going to get an odd one there. Personally, I think we're going to get an outlier get a bit of weakness in the first half, and then maybe it's a strong finish to the year. But yeah, that'll be, you know, we could, if we get something like the 60-year cycle, we get a sell-off in the sort of May, June, that could be the trade of the year. It's basically buying that low, like in June, you know. But, you know, we'll cover that sort of maybe after January. So yeah, if we get the market hangs around here and stays pretty buoyant in the year, and we'll make our projections here based on the cycles.
So they're the US funds, but we did jump over the Aussie, which is always fun to look at because it has been a bit of a letdown, but it's still grinding just steadily up there. You've talked about the rotation that we see within the Aussie, the massive valuations on the banks, historically high. We've seen a bit of volatility kick back in, Chinese stimulus flow through to materials on the Aussie, and all that's just showing us grinding steadily higher. And you are comfortable with what you're seeing here on the Aussie? Is it concerning? Alarm bells, cycles? What's coming to mind?
Yeah, look, it's a little messy here recently, but I think it's you know, slowly climbing higher there. I thought the late recovery last week was a good sign as well, off the lows to finish the week. So just left the index in a pretty strong position there. So I still think we're on track for at least 8,600. You know, could even go higher than that. So yeah, still pretty buoyant here. So can't see anything too negative here. I know it's choppy. I know financials are bloody expensive. But they can get more, you know, can get bloodier expensive, I guess, is that the reality. But there's still plenty of other sectors, Chris. That's the interesting thing with our market is that it's not, I was saying to a client this morning here, it's not like you're seeing everything trading expensive at the same time. You've definitely got sectors that are getting sold off there. We just saw the travel sector get sold off there just recently, and it's started to recover here. But materials that have been sold off here recently as well. They just look like they might be sort of starting to recover as well. Even some of the healthcare names have pulled back a bit here in the last few weeks as well. So you're definitely, while the market's, you know, pretty close to highs here, we're under the hood here. We're definitely seeing different sectors sort of, you know, correct here. We just saw gold and uranium, which were on fire there, you know, 3 months ago. They both had pretty healthy pullbacks here now, some pretty large corrections as well. So just, you know, very, very healthy to see sectors and that rotation continue. So that's why you just got to be careful to be buying sectors that are too hot and been running for a while here. So as much as we like to sort of look for the stronger sectors and then go with them, Chris, if they've been running for a little too high and everyone's, you know, I guess the key there is everyone's talking about them, and that should be a bit of a worry. And I think that probably the mining side there is a little bit more cyclical as well. You definitely, you know, that's probably a little bit more cyclical than some of the other areas as well. So, yeah, just got to be cautious in that area.
Well, there's the next layer down. We want to have a look within some of those sectors. We want to see those trading opportunities. And it's one thing to just buy the banks and hold on. And we know many clients do that. And it's been a favorite for a couple of decades now. Take the yield, sit there and be happy with the growth. The PEs are high, but that's hard to look for and trade that late into that extension. So we look for the opportunities. And this is something that you've noticed happening a fair bit within this market. The undercut of the lows, particularly if they're sitting in the top half of the range, ideally on the yearly chart, possibly just in the last few months, 6 months, showing it basing. So if we move into Orica, this is one that you looked at. We've got the weekly chart here, but is this one of the undercuts that you're talking about?
There's been a few though. We saw car sales do it, saw Telex, saw News Corp, you know, sort of just have a hot run and go through a sideways motion and cool off there. I think maybe even Sonic might have actually, I was just saying earlier, there's probably, Sonic is a little bit not quite as strong as some of the other names, but for the last 6 months is still staying in the top half of the last 6 month activity, but might have just done the undercut as well. But yeah, we're just sort of seeing that, you know, came back, set on top of the previous high, undercut like a bit of an ABC on the pullback, and then we get a pretty positive update. It was an interesting one here because I thought the update, the earnings was actually really bullish, and then actually the first day reacted down, but reacted down on very, very little volume, and then kind of recovered by the end of the day, and then the day since then it's just gone straight up. So I think this looks pretty positive there. That's, you know, it's like a, you know, 3-wave sort of correction, sit on top of the previous high. This should go to a new high here now. So considering the guidance there was pretty positive. I think we saw something like Ansell do something there probably 6 months ago, Chris, as well. Sort of something similar. Got some pretty good guidance there, and it has sort of kicked on here. So I think Orica can probably kick on, go above 19. It might even go towards $20 there. So I think it looks pretty positive.
Well, you mentioned travel stocks earlier. Corporate travel is one of them. Heard a lot of good press coming from them back in conference down in South Australia last week. So getting a few hits of the boxes. 0123, we'd love to see that in the chart. This is something that you scour for, look for great opportunities, and they've had a huge amount of success with trading this strategy. Once again, it's the weekly chart. So we're seeing this movement from the highs of 22, quite volatile, 26 coming down. Now we're under that 50% range. May well have been higher further back to the left of the chart. The moving averages may suggest it. How do you take this under that 50% movement, sitting under the previous low, and possibly building that 0123?
I think they're all, I mean, if you look at, I think if you look at corporate travel, Hello World, and Lifestyle as well, I mean, they're all trading at historically pretty low valuations in terms of where they normally, the multiple they trade on. So everyone's been a bit worried about, obviously, cost of living, inflation pressure is going to stop, maybe sort of flights there, but also conflict around the world has been pretty negative for travel as well. But travel companies actually been still doing sort of reasonably well here. So I think there's some value here. Definitely since Trump got in there, all the travel stocks have all had a nice bounce there. So I think Hearts and Mind actually had corporate travel as one of their preferred longer term picks here as well, Chris, as well. So a few fund managers looking at this one at the moment. So so I think it looks pretty good here. Definitely been a great managed company in the past. They didn't have to raise any money throughout COVID there. So so it looks pretty positive. You've got a nice base here. So I think any sort of pullback there into the range, there's definitely one I'll be looking to add into the portfolio longer term. So I think this is probably just the start of the bigger move there, but just trying to wait for some little consolidation there, and it looks pretty positive.
Nice. Now, Collins Food Group, CKF, this has been, well, we've got a bit of like a straight up, not quite straight up, but a rise, rally, pullback, rally, and then just sort of drifted down throughout pretty much most of this year. We did bounce off the lows sort of August reporting season, and that similar sort of thing. We had a spurt and then a sort of a tight consolidation like we've seen it do before. So what are you looking to happen here in this bit of consolidation we've seen on the right-hand side?
Yeah, so it has bounced up a bit of a key support zone there. Probably the nature of that bounce is probably the more impressive thing. So it had a bit of an impulsive bounce, some good volume there. And then since then, we've had a bit of a pullback, same amount of time now. So it's literally sort of gone up there, 1, 2, 3, 4, 5 weeks, and then pulled back 5 or 6 weeks and only come back less than half of that range. So it's struggling to go down, Chris. So I think, on the daily chart, if I'm not mistaken there, that's actually sitting above the 50-day. It's been hugging the 50-day for the last 2 or 3 weeks. So popped above the 50, come back, sat on the 50, just building above the 50. Looks quite good here. So not that I'm a big fan of KFC, but yeah, obviously I know that like one of the brokers was suggesting selling Glover and Gomez, and might have been UBS actually, maybe they missed out on the deal or something, but they were suggesting sell Guzman Gomez and buy Collins here. That was probably around about the $8 level, obviously a bit lower here. So has had a pop there since then. I think Guzman Gomez has probably cooled off a little bit as well. But yeah, it looks pretty constructive to me. So yeah.
Nice. Well, into a different change of speed, different company entirely. Toll road operator Atlas Arteria. This is one-way traffic for a toll road. That's just not a great chart. We've seen this come from, April, May 2022. We've had just steady movements, reopening, but we're going down towards these October. You've got possible false break here. So could that be a change of character? And how concerned are you by a larger cap company like this far down after that sort of one-way traffic?
Yeah, it's a pretty mean downtrend there, but just started to see a little bit of basing there, a few sort of high lows on the daily, and just a bit of volume sort of starting to build as well. So just starting to see some of those sort of second tier, I guess, infrastructure assets started to get traction there. This is all about interest rates that a lot of these guys work with. So the higher the rates are, so the higher the, interest, the costs are for the business there. So these companies do operate more profitable when interest rates are lower and heading lower. So, we started to see rates start to move lower here. So, there's a company that will basically sort of benefit from rates, getting cut there. So longer term. So if that trend continues, they should turn back up again. So it does look pretty good here actually. So just pretty constructive overall. So I think it looks okay.
It's good to have an eye on those kind of proxies to see not only how the 3-year, 10-year bond rates are looking, because obviously they tell us what's happening with the interest rates. But then if that flows back through, well, how can we actually take advantage of that sort of movement? What's the equities market looking like and showing? So there's the bond market, then we get these proxies or an inverse proxy for ALX. So definitely good to keep an eye on that to understand.
I think some there was a ruling. I think ALX has got a few toll roads in the UK and France stuff there. So there was a tax ruling there change at one of their French assets there, which is going to be advantageous for them. But so that's had a pretty big yield as well. I think the yield's around 8% franked at the moment. But yeah, the real thing there is obviously got a reasonable yield there, but got potential little sweetener there. But it is mainly around the rates outlook there. That's really going to drive it longer term as well.
Definitely a few puns in there on transport, on-way traffic, and driving.
Yep. Sorry.
Right. Inadvertently.
110.
Ingham, I don't know if you want to be talking about chickens getting pulled apart, but Ingham, that's a huge drop there, and we had this flick. So how do you sort of trade that, and how do you look at this volume clearly having a larger movement in the last couple of months, last quarter or so? So
I'm normally sort of scared of these sort of aggressive V-shaped lows here, but we're seeing here, and it was very synonymous with the 40s and the 70s type of sort of moves there, where market might have stood still there or grinded higher over time, but within the sort of sectors, there was just really great volatility within the markets. Some big moves up, some big moves down again. So what we've seen here recently is we're seeing stocks getting sold off really aggressively, but they're not normal market there. If a stock gets sold off pretty aggressively, it normally takes time to build a little bit of a base and get going here. That's not happening in this current market. We're seeing stocks get oversold really aggressively, move down. So, just disappoint a little bit. You get whacked a big bit. But then once, and the selling ends up being pretty aggressive like that going, you think, it didn't seem to be that bad, but then the stocks gets hammered. But then it's not building slowly. It actually just tends to sort of bounce pretty quickly and recover here. So just seeing a lot of V-shaped type lows here. When they're coming off hard and then bouncing hard. So, so it's not sort of a strategy I normally would actually partake in personally, but just seeing some good companies there when they get sold off ultra hard over aggressively, they can come back there. And I think what you're looking for is that volume. Yeah. So if you see that sort of, if you see the volume stay pretty extended there, that's stayed pretty big the whole period there. So that's potential signs of accumulation taking place here. So, I saw something there with Spark here recently, some big volume go through the last probably 6 weeks there. Now we're starting to see Spark kind of bounce there. So again, it's 8 to 9% yield here. So, some of these stocks there, they get down to a level there was a reasonable yield there. And we get touched up pretty aggressively, but just seeing some pretty decent V-shaped bounces there. So just the nature of the current market. So it's it can be a little hairy for, clients there seeing those sort of stocks go up and down. So that's the beauty of sort of, diversification at the moment. Some things are running up and look way overvalued, but they keep going up. And then some stocks that seem to, maybe a little bit disappoint, and then they get hammered pretty hard, and you think, it wasn't that bad, but they get sold off really, really aggressively, but they are bouncing back. So that's the nice aspect in this current market, is you are seeing some pretty decent bounces back.
Well, echoing what you said before on the Aussie having different sectors moving at different times. The V shape, we put the two of them together. We look at Megaport on this week's chart. You've got the weekly chart, and you do see that this has been a pretty solid pullback. So I wouldn't say that's been super fast. It's been consistent. And then it really ratcheted up, picked up speed, and dropped down to where we have its movement now. But exactly what you talked about before, that heightened volume and then staying higher to where it is now, the inflection giving us a ramp up in volume, possibly at that turnaround point in a completely different part of the market. So how do you look at what's happening here with Megaport, knowing that it has been a leader before, if we look further back to the left of the chart, a very strong chart?
Yeah. It's a deep pullback, isn't it? So it's literally come back, 3/4 of the range there, Chris. So it's almost like a resource, like now commodities often have those sort of deeper pullbacks, come back 3/4 of the range. So the industrials might only come back 50, 60% of the range normally. So big pullback here, but that's typical of the environment we're in. So, slightly disappointing here. Can he get sort of buried pretty hard here, but has bounced pretty hard out of that low. Does seem that a little bit oversold here as well. Did see some nice volume on that rally out of the low as well. It looks pretty encouraging. The daily looks pretty good, Chris, because it's sort of gone up about 6 or 7 days pretty heavily on pretty good volume. And then the last 3 or 4 days there, it started to retreat, but no volumes coming in. So, yeah, it actually looks pretty constructive there. It's still sitting on that swing low there, so I'd like to see it sort of maybe, close above 850 there. But, yeah, considering the market we're in, this potentially could, if it bounces back through that level there, could kick on a bit further there. We're talking probably like a $2.50 move from that first leg. If you get a tight congestion there, you probably look at the same sort of move there. So probably looking at going back to $10 there pretty quickly if it does break that level.
Skip too far to go through to the next one. Jumbo Interactive, so a different part of the market once more in that gaming space, online gaming, larger jackpots. Everybody loves those, but we're in that part of the economy where cost of living crisis kicks in. We haven't quite got the concern for jobs, but we do know that in history that has become when people are concerned about their finances, they can actually go towards smaller gambling and jackpots and chasing that kind of entertainment, if you will.
Yeah. Well, it's been hit pretty hard on Jumbo, and to be honest, nothing's changed at the company level. What has changed is that last year we had a lot of big jackpots. We just, Jumbo had like a lot of them didn't go off, and then they jackpotted, and then quite a few of them didn't go off again. So they had a lot more bigger jackpots than they normally would. So I had so they sort of come and say, "Oh, we don't think we'll have as many jackpots this period." So but that's not something they can control. That's an uncontrolled element. Yeah. But look, the market it's come off so hard here on the back of that. So obviously the less jackpots, maybe it doesn't, if we're only going for 4 million instead of 40 or 20 million, we less people buy tickets. So I understand that, but that cyclical as well nature of those jackpots suggests if you go through a period of not having one for a while, then the cycle will change. All of a sudden you'll go through them again. So this looks like a pretty good opportunity to buy a good business, pretty simple to understand business as well. And we know that cycle will change there. Eventually you'll go through some more jackpots there, and that'll attract more attention there. So it seems a little harsh, but that's the market environment we're in. If you're sort of slightly disappointing here, or your news is not super positive, you're tending to get very pretty hard here. So just a bit of a level around 1250, a bit of a low around that 2023. So could be a level we'll see some support here. So this looks pretty interesting to me here. So yes, it's definitely one. I think the story weakness there, I'd probably be looking to add to this one here. I think it's a good stock longer term.
Right. Well, if they say the house always wins, and your tagline for the report is looking on probabilities, definitely looking at that as an investment opportunity. But the last one, which is getting headlines in a space, we're currently seeing CEOs and teams at Woolworths and Coles getting grilled based on price gouging or not fair discounting, and Metcash has been sort of pulled into that in the sense that they're saying it's very competitive. We've got Costco, we've got Aldi, we've got Metcash. It's a competitive space, and no, we're not land banking. So all of these factors being thrown around in the grocer space. Metcash are a grocer, but not as big as Coles and Woolies. How does that play into what we're seeing on the chart and an opportunity to make the most of what's happening?
Yeah, it's not my preferred stock in that sector there, Chris, but it's been sold off pretty aggressively there with a tar with the same brush there, really. So, you know, there's obviously a lot of chatter around, the power that Coles and Woolies have with, being, basically the two having a lot of market share and stuff there. So if anything, there probably bodes well for Metcash longer term and some of the other parties as well. But it has come off pretty hard as well. So we've gotten down to pretty low PE here, under 12 here, and the yield's pretty juicy. Business is still pretty solid here. So just look pretty exhausted technically as well. So that's, we've sort of come off pretty hard. Those sort of 3 candles there, some pretty big volume down here as well. So, I think there's sort of signs of exhaustion into this low here. So, yeah, I'm probably not going to rush out of here, but I think this is pretty solid here, actually. So, it looks pretty interesting to me. I think anything sort of near $3 there, I think is probably going to be pretty good buying.
Nice. Well, it's good to get an insight of those different sectors and understand what's happening at the bottom, especially if you're saying that rotation is still playing shape in the Aussie market. The banks are at high multiples, but they're not the only ones doing a lifting. And as they're sitting at the top, that rotation's happening down below. So it's good to get that understanding of what's actually happening in all these different sectors to understand where those opportunities are. And we have had questions before about, well, what's Gary talking about? On Fridays, he talks about staying in the top half of the chart. To know what's in the top half of the chart and how much legs it has and how the impacts of those cycles, looking at 10 years presidential and so on, impact the index. Got another next layer down, the health of the sectors. And this also helps with that, not only for portfolio investors, but to understand the traders, how much legs, length, and support is in there. So on the other side, is there anything else you want to add to this week's report? Any sort of outlook?
No, I'll try and actually grab that decade cycle maybe and see if I can grab it. Yeah, an indication around that. Try and put it in one of the maybe next week's report here. So yeah, see if I can just so you get an idea what I'm talking about there.
And the importance of those reports, if you're new to this channel and you haven't been watching Gary for years, I'll just show the Aussie chart because these lows here, Gary did pick them. The October lows, he loaded up heavily and then took the market leaders. And that sort of leads into the Friday report where he's picking up those momentum leaders and seeing how they're well positioned to sort of take advantage of these sort of drives off the back of the 10-year cycles, but also using those momentum leaders. We'll put a link on screen to show last Friday's interview where Gary looked at those momentum leaders. And we'll say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.